Credit cards can be your savior when things get tough. They can also be your nightmare if you use them too often. In this 8 on Your Money report, KOMU 8's Brooke Hash reports that now rising credit card rates are targeting even those who aren't abusing their credit.
If you're expecting the government's bailout money to make your credit card rates cheaper, you might have to think twice. While the bailout helped keep your interest rates from skyrocketing, credit card companies are starting to bump them up now over concerns the $1 trillion worth of debt they have won't ever get paid off.
It's not a source of income. It's a source of debt. You know, and I don't know. I mean, there's a lot of young people in particular. They get a credit card, they think, oh, now I've got money that I didn't have before. No, you don't. Now you have the opportunity to have debt you didn't have before.
Over the last month, at least 3 credit card companies have raised rates for their customers. Bank of America boosted its credit card rates to a minimum of 10% across the board. Other card companies like Chase and Citibank are raising rates anywhere from 3 to 20%. Joanna Kohlmeyer works at Columbia's Credit Counseling Center and sees a variety of people walk through her door.
They'll come in with debt on the credit cards, but some of them have always paid on time. They've never missed a payment, and then over the last couple months, their interest rates have started going up.
I usually try to pay it off every month, but that's not always possible.
So why can credit card companies keep raising rates for those who have good credit? A 1978 Supreme Court decision concluded that national banks can charge the highest rate allowed in the bank's home state, regardless of where the borrower lives. This means while Missouri has a credit rate cap of 9%, if you have a credit card that's based in Washington, D.C., New York, North Carolina, or California, where there's a higher cap rate, if any, they can charge you whatever they want, getting around Missouri's 9% limit.
There's a real question of almost social justice at this point.
Federal regulators put new rules in place in December that would keep card companies from raising rates for no reason. But it won't help you if you're in trouble now.
That legislation does not go in effect until July of 2010.
The Obama administration is holding several meetings with card executives to discuss the policy coming sooner.
Banks are forgetting the fact that they're working for their customers and that their customers, again, have to come first.
As a credit counselor, I asked Kohlmeyer if she'd seen her credit rates rise. She said she doesn't have credit cards.
Working here, you figure out you shouldn't have those.
For more of my one-on-one interview with Rob Weagley, visit our website at KOMU.com.